it's Stuart, and welcome to the proptrade.com, our latest daily video. Remember, we do these every day around about usually, typically, with the big news of the day. Today's major news: the three three bears here on the investing.com calendar is we've had euro inflation early on today that came in a bit weaker than expected, which is a good sign for us here in Europe. The main US news is in 15 minutes. The JOLTS, remember the JOLTS is the openings, how many vacancies are around, how many people are actually swapping from job to job. It's the churn in the market. That's a key thing to see how healthy a jobs market is. If lots of people, there's all right if there's lots of openings and nobody's filling them, that's a problem. If there's lots of people swapping from job to job, that's usually okay. It means there's pretty healthy people are happy to move from job to job. They tend to move for higher wages, don't they, or better deal, or better work-life balance, all that sort of things. All very key. It was first created, the jobs data, or the JOLTS data, by Janet Yellen when she was head of the central bank in California. So it was very important. It had more significance when she was obviously head of the Fed. It was obviously significant when she was the Treasury Secretary under President Biden. It's perhaps less so now, but it's still a key indicator. It's still a high impact event. It's come down quite significantly over the last, it's been trending down quite significantly. If we get under 7 million today, we're expecting 7.1 million. It was a big 7.11 million. It was 7.19 last time. This time last month, we were looking at 7.25, so it was weaker than expected. So again, it's a sign potentially of the cracks in the US jobs market. Obviously, things are different now since January, since President Trump's been thrashing his tariffs around all over the place. So see what that number looks like at the moment. The dollar remains very much under the cosh. You had a weak day. Yes, it's bounced back a wee bit today. The euro's come off a bit. We were edging to eyeing 115. Cables over 135. So I think it's come back under that recently. But we'll have a look at that, obviously, all live, guys. If there's anything you obviously want to have a look at, a particular assets, a particular indicators or particular ways of trading, let me know. We'll do it all live here. This is obviously all recorded. You can watch it either now live or later in the day, and then we'll be back again tomorrow, same time tomorrow. It escapes me what's actually happening tomorrow at this time, but I know we're on Wednesday for same sort of time, 14. 40 was it? We got the services PMIs. We've got the Bank of Canada, haven't we, tomorrow? Of course we have. Yep, Bank of Canada. No rate change expected from the Bank of Canada. Some calendars yesterday were showing a potential cut of 25 basis points, but it's looking like they're not going to move. Whereas the Bank of England are much more likely to cut rates tomorrow. And we obviously got the private payrolls as well, the ADP earlier on. Tomorrow. Anyway, back to today. US stock markets have just opened. This is the S&P 500, the world's most important stock market. We're still in this trade. I haven't managed this really badly. We had this shock move up, and then we give it all back when the turnaround, the taco comments around Trump's sort of backing off his tariffs. So he rallied towards the 6,000 area. Obviously, the president said, "No, I'm not having any of that." And he talked about increasing tariffs on Europe over the weekend again. So we moved lower into Friday. We bounced a wee bit yesterday after a very weak start to the cash session yesterday. We did close over our entry level from the 27th, and we're back to there again now today. But again, it's quite a weak start to the US cash session. So this remains positive. We've still got, that's a half a position up because it took out target one on that one, so it's only half position on that. The Nasdaq has a full position and it's also in the money, similar sort of pattern, down and then back up, but obviously we missed out on this target zone here. I've just brought that target in now, 21,800 for the current open trade, but I might close that before we get there. But anyway, 21,500, we're still 300 points away from that first that target for that trade. I'll close the whole thing, I think, because it's been a bit of a messy one, as you can see the indicators. you know, a bit messy, not but we're still in this. We're still moving up. It's moved up here in this hourly time frame today. So okay, so away from our entry level, so it's still bid. So that's a full position that's open. The S&P, and the same with the Dow. Although this is still shy of our entry from the 27th, and has been, that's looking a bit weaker than the others. And again, another one that got within a smidge of a target. This was an actual set target, got within a smidge of it on the 28th, 29th, before it sort of turned around quite significantly. Target remains at 42,740, 750, something like that, if I remember right. Or is it 42,744? Yes. So, but I am managing that on an active basis at the moment. So we'll see how that goes today as well, to the upside. They're the only open trades. I didn't take. There were lots of trades last night. I didn't actually post any on our Discord group. I wasn't feeling very well last night, and there was lots going on, so I didn't have the energy to actually manually transfer them from my trading position. But there were a lot of short dollar positions yesterday. Some of them hit target already this morning and closed out. But anyway, we're not counting them on our Discord group like we do on all the others. So at the moment, on the Discord group, guys, under the trading strategies session, I still haven't updated for May. I will do that today. I promise I will do that today, and we'll all be up to date. As I say, these last two trades we opened on Friday were both losing trades, small losses, but there was the Euro CAD was a loss, and the CAD Swiss was also a loss, but we'd won quite big earlier in the week, and we were up for the week. As I said yesterday, the DAX was a 400-point losing trade as well. It hit its stop loss. Again, one I hadn't managed very well, but we'd made some nice profits on the pound, long pound positions against the yen, the Swiss earlier in the week as well. So anyway, enough of that. That's what's happened. It's all about what we're doing next. And there will be some more trades tonight. My systems are triggered quite nicely. This first week of the month can be quite positive as well. Obviously, there's lots of news that's moving the market. So check out the trading strategies group on our Discord group. If you're not with us, just join on. Basically, it doesn't cost anything. It's free. So where are we? So stocks are. I say the cash is started a bit weak, but here the derivatives market were up on the hourly time frame and over the flattening 20-hour moving average. So we're up generally on stock markets. Let's go to the top of the shop. Bitcoin is back under 105. Oh, it's actually back over 105. It's under 105 when I looked earlier. So we're holding, literally, as I said yesterday, pivoting through this area and really congestion. So that's the hourly chart. See, sideways yesterday, sideways again this morning. So today we've been as high as 106. 500, and we're back to 105 to 300 at the moment. If we look at the daily chart, no great change on that. We continue to find support at the 20-day moving average, this key 105 area now, and the big intraday, or not the big, but the key low here was 103. We saw here at the end of May, so we'd come down for a week from this new all-time high over 111 into 103. We've held that. And you know, it's waiting and looking for direction. So 105 is our key support area. Below that is obviously the psychological 100,000 we said yesterday, and the key 96,000 and the key 92,000. This channel we were in for a long time before we moved up, but we remain bid. So here on the 20-day moving average, that's just waiting and see, a bit like we did here the best part of 2 weeks before we rallied up. So obviously we could go either way. Bias, one would argue, would be to the upside until we find out other ways. There isn't a 50-day. If I just insert the, I just put in a 50 period moving average on here. Just a simple moving average, and put in the 51. You can see where that sits. Change the color. What color should we have? Let's make it a deep pink one. There we are. That'll do on it. Make it a bit thicker than that. There we are. Sorry, that'll do. Okay, so our 50-day is still down here, but interestingly rising to that key 100,000 level as well. So 50 days around about that 100,000. I've just taken it off by accident. Oh, there we are. Where's it gone? Disappeared. Oh well. Anyway, there we go. We are holding at the 20-day moving average. Let's get rid of that one. Remove. And that's actually, that is on there apparently. So, oh, it's gone white. That's why. I must have. What have I done there? Sorry, just bear with me a second. It's all white. We don't want it white, do we? Let's make it a nice green color. Okay. There we are. There's our 50-day simple moving average. There we are. All the way down there at the 100,000 level. Okay, so Bitcoin, after all that messing about, we are still bid. If we look at the dollar, remains under pressure. So 64.50 has been breached for the Aussie. Again, big old channel we've been in. We've talked about this before. There's that 64.40 low and the 65 handle into it yesterday, down from it again yesterday. So min reverters. Ideal play short at 65 on the Aussie, and I say the dollar's a bit better today, but remains in the higher time frame weak. There we go. Testing. Big move down. That went short there at 3 o'clock on the 3 o'clock close of the 2 o'clock candle, and it's been short all morning as we've moved down. Thank you very much. There's this key entry area from whenever it was, the 5th. This might be our downside target, the 64.44 for the Aussie, but stalled at 6 o'clock and doesn't want to move any lower as the US all the way through the European session and into the start of the US session. So Aussie supporting at 64.40, but 64.45 is to the downside. Dollar CAD 37.30. Ticking up a wee bit, but again, as you can see, it's just moved over its 50-hour moving average. But again, if you look at the daily time frame, remember we've got the Bank of Canada tomorrow, later this week, with their announcement on no rate changes expected. Lots of obviously we've had lots of political shenanigans going on between the US and Canada recently, but Mark Carney's come back with quite a strong mandate, and talking strongly about defence deals with the Europeans and other partners, and trying to distance themselves from the Trump administration in America, obviously, but a major or their major neighbour and economic partner. So not making it easy for Mr. Trump, as you might expect, or President Trump. So dollar CAD remains to the downside. The 20-day moving average all the way up there at 138.32. So that remains to the short side. It's the same way across the piece. Dollars come back against the Swissy today, bounce, but again another one that's trending lower. The 81 level, this purple line here, the .81 level, is the next downside target here. And you see the here on the daily time frame, you see the distance between the 20-day is starting to widen. There's a bit of fresh air there. Yesterday's move down has been bought back today, so clearly this week we've got support at 81.65. Yesterday's closing market as we've come back up, but we had, I think, weaker than expected Swiss data this morning, wasn't it? What was the Swiss data this morning? It was the CPI data. Yeah, the inflation. Actually, no, CPI was actually in line with expectation, 0.1% this morning. So there we go. Right, it's 3 o'clock. Let's have a quick look at the jobs. JOLTS have come in stronger than expected. So they've perked up to the upside. So 7.39 million, so virtually 7.4 million. If we just take off the forecast of the brown side, you can see the trend remains very much to the downside through 23 and 24, and it's flattening off. So the jobs market continues to hold strength. It is a weak number. Sorry, that's not this one, is it? That was the April number. I haven't actually got the June number on here, the May and the June number on the main number on here. So it's coming at 39. So we come back up to around about here. So it's ticked up. So the low we had in April has been bought up. So that's quite a significant beat as well at 7.4 million from 7.2 million. So it's another another 200,000 new jobs openings. Remember what this is measuring, and people moving around in the marketplace. So that's quite a healthy. Again, both sides of the argument, whether we're going to have recession in the US or not recession in the US for the jobs market. Obviously, we've got the ADP tomorrow. We've got non-farm payrolls on Friday. For the bigger picture, we've got the weekly claims also on Thursday. But I say both sides of is the jobs market strong or weak? This is a tick for the strength of the resilience of the US jobs market. So 7.4 million. First time it's ticked up. And beat expectations. Let me just put the forecast on again. Beat expectations for what's that? It's coming at up here. So it's obviously this data hasn't been already updated yet. It's coming. That was last month. So it's 1, 2, 3, 4, 5, 6 times. So So since this January number, so it's as good as it was at the beginning of the year. So obviously the trend remains down, but as you can see, we're still very healthy, even compared to pre-pandemic areas here. Back in 2019, it's still above that level here. This 2019 levels. It's down to those sort of pre-pandemic levels of activity in the jobs market. So we take out the impact of the COVID and the response to it, was still sort of trending. It's still a fairly healthy US jobs market. If we take those extremes out of that, you can see the trend is still moving to the upside. So even though there's obviously this clamp down on migration and immigrants being deported out of the US, and that having an impact on the jobs market, what the type of jobs are that are coming back in. So yeah, that's quite a healthy number. So we might have seen a bit of a bounce in the dollar. We'll see 113.82. Yeah, it's come. Looks like it's might have come down a wee bit. So we just go back to the 5-minute chart. The dollar's been better against the euro today, even though we're relatively weak, and that key data hasn't really changed that trending down movement to the downside so far today. In fact, that data has pushed it to 113.72, but we've still got an area around about the 113.80 area. 113.80 is our significant low for today. You can see on that 5-minute chart, but the trend, remains to the downside. Careful about trying to take longs on this position, although we have had this consolidation now around this 20 period moving average, which is interesting, upside, and then sold off again. So it doesn't look like we want to go any shorter. So if you wanted to buy this, I'd like to see a tilt up, obviously in the moving averages first and foremost, and perhaps a stop loss down around that one, just below 113.80, say at 113.79 here on the short term basis, to move up. But at the moment, there's no trade there because it's flat. The moving averages are flat. The MACD and the signal line have already crossed and moved up quite significantly, so we may be running out of steam. The RSI just can't get back over into the 50 zone, so there's no trade there on that 5-minute time frame for the euro dollar. And the higher time frames, the 30 in the hour will remain, so the 15-minute will remain short, and the 1 hour will certainly be a short position there, as we said earlier, from the opening Europe intake here at the 8 o'clock candle took us short, and more importantly, we're under the 50-hour, that green line we put on the charts earlier, from 12 o'clock as well. So we're moving lower, and the next you can see on the hourly chart that we've broadened out. The next support area takes us below that 1380 area into 1365 on an end of hour basis. That's the next zone to the downside on my chart there. Just looking at that chart as it stands, as you can see, move down. A bit too late to enter that as a short, but touching the overbought zone, oversold area, and this continues to move down. So there's still lend target area zones to the downside, and then below that, if that breaks there, obviously where we are now, and then the next level, we said this zone down here, 1350, and then 1345, and then these two candles look quite interesting down there at 1316, 13 under 1320 as well. So some nice sort of steps down for euro dollar against the dollar today. the euro against the dollar today to the downside. But 13.72 is where we trade at the moment. But I say here it's been short since 8 o'clock this morning on this hourly time frame, from a consolidation into the end of the US Asian zone and beginning of the European session. Didn't want to move higher. Now, that candle there was the signal, having been nicely long yesterday to the upside. Sterling, on the other hand, remains holding 135. In fact, it's come back to test it. So the dollar's ticked up on that JOLTS data, understandably. But again, the higher time frame trend remains very much set. The 20-day moving average is at 134, and we're back to 135 now, so still 100 pips away from that key pivot to the downside if it's going to happen. But we're struggling. We couldn't close above 135.60 as we entered the end of May, and some sort of pivot around the 135 area has happened for a week or so, and that looks like that's continuing. So a break below 134.50 would suggest that rally to 135 is not going to be held. Holding 134.50 suggests that we may continue to be bid to the upside. And then you see here the 50-day moving average has been major support going up, and indeed the 20-day, the panic at the beginning of April when stock markets sold off and the tariffs announcements were flying around, but the dollar's weakened massively since then as stock markets have recovered, and treasury markets play as well. So 135 for cable to the upside. No messages today, so that remains sort of bid. The trend continues to the upside. Let's have a look at gold. Where's got gold doing? And again, starting to move away now. Yesterday was a significantly positive day from the 3,300 level. So the daily time frame found key support at this 20-day moving. It worked absolutely sort of textbook type support there. So we can't roll out new all-time highs again for gold. It's got lots of demand for lots of different reasons, and that's been sustained throughout 2025. But might be starting to showing signs of running out of legs above 3,400. So we're currently trading at 3,340. Couldn't hold the rally to 3,500 at its first attempt in April. Got shy of that quite significantly at the beginning of May at 3,430, and we're yet to push to a new high. But that was certainly a strong day yesterday. We'll see how the rest of the week pans out going in. For the rest of the as we start the summer season, the key 3,300 level remains significant, obviously, for gold bulls. A breakdown of that and a break of the 20-day will then quite quickly bring in the 50-day moving average, which now sits at this 3,330 for the sake of round numbers. That orange line there, 3,330. Yeah. Sorry, more something. That's 3,250 is where our 50-day moving average is. Sorry, ignore that. So it's 3,250 is the big support area for gold as we go through the summer months as we move forward. But it still remains bid. It's over the 20-day moving average, and it's managed to hold that now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 into our 12th day above this key 20-day moving average. And we're now into our 10th day, sort of playing around the 3,300 level. So that's key. And the 20-day moving has now moved up to that key level as well. So it makes the 3,300 level, that big round number, quite significant. And yesterday's rally key. As far as today's concerned, we're down, and we'd have been short a bit like the dollar against the euro dollar here from 4 o'clock this morning this time. Consolidate, and then we just moved significantly lower in the last hour into the 50-hour moving average, interestingly, and that's where it found support, or it tested, went lower, and we're actually right on that at the moment. So we could see some more weakness in the gold market today, perhaps bringing this down to this next level here, 3328, which is on there, usually on there for these dotted lines are usually on there for a reason, and that would be my targets to the downside now today. If this break of the 50 period continues, so it's moved, consolidated, moved lower on that hour there. So the major move of the day might have already happened here, but gold currently trading at 3,340, weak for the day, having got to a new recent high yesterday at 3,390, shy of the 3,400 level by $10 yesterday. But a nice, strong, positive trending day, but very big day yesterday, as we saw on the daily time frame. So gold giving back some of yesterday's major gains, but was still significantly above the 3,300 level on a daily basis. Plenty of news to come this week. As I say, we got the ECB expected cut rates on Thursday. The Bank of Canada not expected to move tomorrow. We got private payrolls Wednesday as well. On those, obviously on Friday, we have the non-farm payrolls, the jobs for the month, the most eagerly anticipated jobs data in the world tomorrow on Friday at 12:30 GMT. So we'll be live for that as well. Chatter remains yesterday. Trump's talking about, they said yesterday they want the best offers from their trading partners, or some of their trading partners, by Wednesday. Goods very much in the focus. There's chatter around all the other geopolitical things that are going on. There's noise of an Iranian nuclear deal progressing quite well, if you believe all the spin coming out of the White House. And obviously the Ukrainians and the Russians met yesterday, despite the audacious, very, very audacious attack by Ukraine over the weekend, destroying some of their long-range bomber, the Russian bomber fleet. Agreed to exchange prisoners of war. So it's ongoing, but it's very acrimonious, obviously. And obviously the situation in Gaza continues to be a tragic situation of humankind. But it's all impacts sentiment as far as the markets are concerned, unfortunately. So there we go. It's not a great deal moving on today. Let's just finish with the euro, see if it's continued to unwind. 1378, not really. The move lower has continued from the from the JOLTS data at the top of the hour. It's bounced back a wee bit, but continued to trend to the downside. Be careful buying that on the short-term basis. The trend is very much to the downside today, and in the higher time frames as well. So that's all for today. Join me tomorrow for the Bank of Canada and the ADP and a review of the ADP numbers earlier on the day. If you're not with theproptrade.com, why not? Do come and join us. There's lots of opportunities. You've either a two-step or a one-step challenge. Lots of investment levels. The evaluation phase, I say the one-off two-step. The most popular is a $25,000 account on a two-step approach. It's our most popular account from the standard account. They are, expresses simply the one-step challenge. Pro gives you some sort of a better leverage on some items and some ability to trade the news. I know a lot of you like to trade the news, some improved leverage, but check it all out. And the other big advantage of the Pro account, guys, is the fact that you are profit share starts at 90%. Standard on the standard account is from 80%. The Pro accounts start from 90%. From 90%. So you can scale up to some significant real cash with the funded account. Even though you're trading simulated accounts with live feeds, it's a way of leveraging a big equity for a very small investment. So 25,000 on a standard account. I think SC wasn't working yesterday, was it? Let's see if it's still, has it run out? No, it's not valid anymore. So I think the new is still, I think new still works. New 25. As we go into June, yeah, it's obviously only running until June. So $25,000 dollars worth of equity for $130. That's a saving of $44 from the $175 dollar account, which is already very well priced, to be honest, my friends. And it's not just about prices. It's like anything you buy in life. It's about, you know, the added services, the added value you get from or anybody you do business with, and that's what we try to add and make ourselves unique in that phase. So we're very open, very transparent. It's very clear. There's nothing hidden. There's no, you know, very small print in our terms and conditions. I'll actually open them up for you. There we go. It's all very, very clear. It's all in big print here on my site. There's nothing that doesn't make any sense. And if there is, ask a question. We get back to you almost instantly. I'm very, very proud of the support guys and the team and the directors here at the company. They get things sorted very, very quickly. So come and join us. I'm here to help. We're all here to help, and it's all about doing the right thing and being able to realize your dreams, my friends. Okay, so take care. See you all again tomorrow, and trade carefully.